We are joined now by Scott Gecas, and he is with Walsh Trading at the edge of the trading floor in Chicago. A lot of bearishness just rampant here in the grain complex here today. A, are you surprised by that? And B, is there more to come?
Well, right now, though, the main thing that's driving all the grain markets is going to be the weather. I mean, you still have a lot of volatility due to all the headline risk, the Trump effect, the tariffs between Mexico and China. That's always going to be in focus. But right now, the main thing that's driving these markets is the weather. So with the next 5-day forecast, it looks like the weather's starting to dry up slightly, not that much. But you're looking at planting progress being the lowest on record, going back to 1980. So that's definitely a significant fact. That's a significant number. We're going to keep an eye on the planting progress as we continue to get more in the ground, but we got to wait and see how that's really going to play out once those numbers come out.
Okay, so when you look at these corn numbers, in fact, we just got some new ethanol production numbers, and I wanted to throw that into the mix here, too. We had the ethanol production this past week actually dropping a little bit. So we had the production there, 1.044 million barrels per day. That was down about 13,000 barrels a day from what we had last week. The 4-week average crept up a little bit, a couple of thousand barrels to 1.056 million. The stocks basically about the same as what they were last week, maybe just a tick downward. Imports still at zero. But is that adding a little bit of pressure on the corn on top of everything else here this morning?
Slightly, not really too much. Again, I think it's all due to, the next 5-day forecast looks a little bit drier in the Midwest and the Great Plains, moving a little bit south. So, if we can get a little bit more planting in, we're going to see that effect really take effect. But, what we really got to look at is, especially with the soybeans, is we're watching the yields. If the yields are expected to drop a little bit just due to the switch from corn to soybeans, but if we don't get a very drastic, significant drop in the yield, it's not going to affect the world-ending stocks. So that's definitely going to be in focus in the next, I would say, about 7 to 10 days.
Okay, Scott, we'll come back in a moment, and we'll talk about our livestock trade as well. Here on a Wednesday, Scott Gecas is our guest. We'll be right back. Scott Gecas rejoins us. He's with Walsh Trading in Chicago. And your take here on the livestock trade. It's a little bit jumpy here today again.
Yeah, definitely. And with the cattle market, you're seeing a little bit of support just due to there's a report of mad cow disease in Brazil. So what that means is if Brazil is going to ship their beef over to China, China still has to inspect it, and that's going to take a long time. So you're seeing a little bit of support just due to that just headline right there. And the cattle market, with the hog market, it's all over the place. The fundamentals are extremely bullish. You have African swine flu, and then there was a report that China's going to inspect the Canadian meats. So that's definitely adding a little bit more bullish catalyst to the upside, but you're just not seeing that market react. And that's one of the things I was talking about earlier this week, saying all the fundamentals are bullish, but the market's just not reaction. That whole theory thing is the theory for a reason.
And we thought it was interesting, John Jenkinson and I were talking about that this morning, that it was fascinating. Over the past week, China came in there and they did buy soybeans. It was like over 150,000 tons of soybeans last week and 39,000 tons of pork. But as long as their purchases remain under 100,000 tons, they do not have to report that on a nightly basis. And so it kind of snuck under the radar there and snuck in some purchases. We have to wonder if that'll show up again tomorrow when we get our weekly update here.
Right. And with the African swine fever and the strong demand that is in China, China's definitely going to play the game with that mark. They will continue to buy things under that mark so they don't have to report it. Whether or not that is going to be reflected in the numbers later on, we have to wait and see.
And, of course, back on the corn side, there was that news story about Brazilian corn maybe coming into the U.S. through Wilmington. And the news story I was reading a little bit ago said that would be done by Smithfield, which is owned now by China. Isn't that all interesting? So we'll keep close tabs on all this and the developments as a result. Scott, thanks for all the information this morning. Good to visit with you again. I hope you have a good trading day. Scott Gecas of Walsh Trading. He's right there in Chicago. Janet, busy day.
As always, thank you, gentlemen, very much.